Hello, welcome to FountainFX on Friday the 23rd of May 2014. We're just doing a quick summary of the Euro US dollar, especially because there's been quite significant price moves in the last week as price has fallen quite rapidly. And it's really just to put things into better perspective. So it's always good to look at the big picture. So we're looking at the Euro US dollar on the monthly chart. And as you can see that in terms of where price actually is, it's in a uptrend. And it's somewhere between this previous low of the 123.75 and the high at the 147.82. Now, despite obviously what the Europeans have said, that the ideal price for the euro is at $1.40, hence price got near to it and then turned and fell. That seemed to be the cause of it. Price is really, if you look back in the past, has bounced either side of it. It hasn't like sat at $1.40 and stayed there forever. So we need to be aware of that. We also need to be aware that this is in an uptrend, but if we then go into a lower time frame and we keep this trend line on here, then we can start to gain a better perspective of price levels, potential turning points in terms of support and resistance, and therefore where we can be looking at taking trades from. So for the next week, that is. If we go down into the weekly chart, and we can see very quickly on the weekly chart that last week's performance has broken below this trend line, and also price has formed a double top on the weekly chart, and price has actually broken the neckline of that double top. So it's confirmation based on price performance and the chart patterns that we are starting to form a downtrend and price is pushing down. To gain further confirmation of that, we would like to see a lower high form, that price doesn't get back up to this 138.70, and also we would like to see this low around about the 135 get broken as price pushes below that. So that's how we would be able to confirm on the big picture that price is now starting to turn and create a downtrend on the bigger scale of things. So if we now go into the daily chart, on the daily chart we can start to notice certain price levels, and the key thing is that we can see that these price levels are, obviously you get more accuracy in terms of the pricing that you get when you're looking at the bigger picture. So just looking at this, there's certain things that we need to be aware of. One is this area here where price has fallen from. We're looking at an area of previous area of support. It's the neckline. If we look at that, it is actually the neckline for the double top, so it is significant at the 137 level. But also, if we come down from there, moving from right to left, that is, we've also got a previous area here where price pulled down this very long wick, came down into this area, which confirmed with the previous area of support at the 136.50 level. And price then broke through that and pushed down further. Now what we're looking at below that in terms of other areas of support, if we look at this area based on this pullback and then rally, we are looking at the 135.90, just a bit below the 136, and at the bottom here we are looking at the 134.90, so around about the 135. So I've marked all these on because these are significant levels that we need to be aware of. We're now going to go down into the 4-hour chart just to be able to get a clearer picture yet again. But the one thing we can see is that this trend line has been broken. So if I double click on that and get rid of it, then we've got a clearer picture of what's happening here. Now it may be a case that what I need to do is just plot a trend line from the highs, if I can plot it properly, from the highs to the lows here. And if we include the wicks rather than the bodies, we have more of an astute trend line forming. So we therefore have this very, very strong momentum downtrend. So if I just pull that back in better, there we go, roughly there. Okay, it doesn't have to be absolutely perfect, it's to give you a good idea of what's happening. So we're in a downtrend based on that. It's broken the neckline, so we need to be looking at where the opportunities are. So we'll go down into the 4-hour chart and see what we can find. And now we're in a trend, now we're at the 4-hour chart. We can see price a little bit more accurately than previously. And if we look here, where my cursor is on the left-hand side, we can see that price actually fell further than the 135, 136 area. So we can click on that trend line and we can drag it down to the bottom of there, where we can see where price started to rally from. And that's at the 135.60. Also, the bottom of this other trend line, we can click on that and we can position that better. So we can look at price turning around about the 134.80, and we're looking at the 135.60. These kind of areas here for these lower areas of support. Now, where price actually is at the moment, it's always good to look at where it is in perspective from other price activities. And we can see that where we've marked on this previous area of support that was very recent, from a 4-hour perspective, we follow that along and we've got a similar area here where price hit that level of support, that price, and then move rapidly from it. Well, price hasn't done that, it's broken through that. So this would be an area where we would look to, if we get a pullback, it would be great to see it pull back, price pull back to the 134.50 area, somewhere around there, for it to then turn and have a continuation down in this downtrend. So we would like to be able to see some bullish momentum at the start of the week to push price back up for us to then be able to take it and continue in that downtrend. There's the other side of it, that if it doesn't happen, we also then have this gap fill almost, if you treat it as a gap, from where support was previously down to where support was. So if we look, there's a gap between these two areas if we're looking at support to support, and that's therefore, potentially price can therefore run all the way down to the 135.60 from the 136.50. So we've got approximately 90 points gap there, where price is at the moment is at the 136.30. So it'd be nice. There's a possible trade to take it from the 136.50 down to the 135.60. So a 90-point gap. If it then breaks below that, we've then got this area below at the 134.85 for price to go to. It's important also when you're trading to actually have these targets, because often we can sit with a winning trade because of our greed, and expect it to go even further, only to watch it come all the way back, take us out, and we lose our money. So it's key to have targets, but it's also good to know where to get in and where to get out. And what we're planning here at the moment is we're waiting for a pullback, ideally to the 136.50, to then take a short this week down to the 135.65. So really that's what you need to be looking for at the start of the week. We shall see. Happy trading from FountainFX, and we'll talk to you on Monday.